the Fed needs to move aggressively to keep inflation under control.
Are we headed into a recession, or is this the Fed actively crafting a soft landing?
The market's now starting to play a huge catch up to the fact that that there's a real big moment of truth in the bond market.
If I'm investing over the next 12-month horizon, I would reduce equities at this point.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, March 23rd. Our top stories today. Global bond markets have never suffered losses like these. As central banks have tightened policy, the Bloomberg Global Aggregate Index has lost $2.6 trillion in market value. President Biden takes his tough on Putin message to Brussels. He'll try to persuade allies to impose tougher sanctions on Russia. And Wall Street retreats from Moscow after catering to Russian firms, Russian billionaires and the Russian government for decades. The big banks can't get out of the country quickly enough. Welcome to Bloomberg Surveillance. Early edition. I'm Anna Edwards with Danny Berger in London. Kailey Leinz with us in New York. Matt Miller is off today. And Danny, really interesting as we take a little bit of a pause from the incredible selling of bond markets earlier on this week. Interesting to think about the role that stocks play in all of this.
Right. Stocks have been very resilient in the face of these record losses, and Asia stocks no exception. This morning, Anna, the MSCI Asia Pacific Index up more than 1%. The bulk of these gains driven by Japan and Hong Kong. Now, I want to take a moment here on Hong Kong because this is a fascinating story when it comes to tech. Companies like Xiaomi, Alibaba spending billions buying back their own stock. Now, in the past, this wouldn't have moved the needle much, but regulators now encouraging this, delivering value to shareholders. So the market believing it. Hong Kong tech stocks up 2% today. That's a 35% gain in the past 6 sessions. Now, beyond the Asia-Pacific story, this is a global bond market. Even bond yields moving higher is taking a pause in the U.S., in Europe. Aussie bonds, those yields still charting higher. Those are at their highest since 2018. Again, catching this downdraft that's coming from the U.S. And of course, Kailey, that's also impacting the yen, that yield differential between the U.S. and Europe. At one point, we were past 121, but still hovering around the weakest yen since 2016.
Yeah, it really goes to show you there is a widening divergence between global central banks. On the one hand, you have the Fed vocally moving toward aggressive tightening, the BOE and the ECB also on the tightening path. The BOJ, though, far from it. Kuroda is definitely not in that camp at the moment. Now, when it comes to U.S. equities, of course, they are contending with that Fed tightening. But nonetheless, the S&P 500 has risen at least 1% in 5 of the last 6 sessions. What's interesting, though, is while futures were higher earlier on, we have rolled over. Right now, S&P E-minis are down by about 0.1%. And as Danny mentioned, a little bit of selling pressure in the bond market easing today after rising 23 basis points in just the last 2 days. The 10-year yield coming in by about a single basis point. We're sitting just shy of 237. Pointing to oil as well, of course, a lot of volatility in that space as the market contends with potential further sanctions on Russia, whether or not Europe is going to act on Russian energy. Right now, WTI crude up about 0.5%, just south of 110. And finally, pointing out Bitcoin as well, we remain in the range we have been in really all year, Anna. Right now, just fractionally softer on the day, trading right around that $42,000 level.
Yeah, it's interesting to think about what that move in Bitcoin might be signaling, Kailey, because elsewhere in risk assets, certainly in stocks, we are pretty resilient, as we've been saying through the Asia session here into Europe. European stocks in the main moving to the upside, not by a great margin, but certainly moving higher. The FTSE 100 up 0.5%, the DAX and the CAC up around 0.2%. And it's interesting to ask why we're seeing this buying of stocks. Are we buying stocks? Are investors buying stocks because they fundamentally believe that these businesses have pricing power and an ability to withstand higher commodity prices? Or are we just buying stocks because we've sold bonds and the money needs to go somewhere, and is that slightly less of a long-term judgment call? Interesting conversation we will pick up as we go through. Thinking of commodity price pressure, just keeping an eye on this as we continue to think about where the next round of sanctions is going to come from the EU, from NATO, all of that, we're told, very much in focus this week. 116 still there, the handle, the start of the Brent crude number there. 132 is the pound right now, 132 against the US dollar. This is a little bit of pound weakness, despite the fact we saw a 3-decade high inflation print for the UK economy, handing over the baton really to the Chancellor Rishi Sunak, who's going to be delivering his spring statement later on today. Is he going to be able to cushion the blow for businesses and, more importantly, perhaps for many, for consumers when it comes to those higher energy prices in the UK? Auto One, this is a German business that sells used cars. This has been very topical, I know, in the United States as well. That stock down. It was actually up in the early part of the trading day, but now down over in Germany, down by 9%, as they had some cautious words to say about consumer sentiment going into the rest of the year. RWS Holdings, is a professional services business. It offers translation and other services based here in the UK. That stock down by nearly 30%. A number of factors here. They've guided lower. They're cutting their profit targets, but they've also said that they're going to step away from delivering any kind of technology or service for any Russian entity. Kailey.
All right, well, we will continue to keep an eye on that price action throughout the day, Anna. And as for what else is ahead for today, we will hear once again from Fed Chairman Jerome Powell, as well as the Bank of England Governor Andrew Bailey. They'll both be speaking at a BIS panel. I'm sure the market will be clued into each and every word. Also, UK Chancellor Rishi Sunak, as Anna mentioned, will be delivering his spring statement at 8:30 a.m. New York time. It's no longer just about monetary policy. We have to consider the fiscal part of this equation. And finally, we'll get the EIA crude oil inventory report at 10:30 a.m. New York time, Danny.
Well, Kailey, along with all of those, we're going to keep track of the global bond losses because they have accelerated to the most on record as central banks resolve to curb inflation. We spoke to St. Louis Fed President James Bullard.
Faster is better. I think 50 basis point moves would definitely be in the mix. Right now, we're putting upward pressure on inflation. It's the wrong place to be given where inflation is.
Joining us now is Christine Aquino, who helps lead our markets coverage. And Christine, when we think of bear markets, we often think of this 20% drawdown figure, which obviously doesn't apply to bonds because the moves there are much more thin. So characterize for us just how steep these losses have been in the bond market.
Well, Danny, this is basically the steepest that we've seen on record, and even surpassing the initial drawdown that we saw a couple of weeks ago that kind of rivaled the global financial crisis era sort of drawdown. But we're well past that now. This is really nothing that we've ever seen before. And I think it really speaks to kind of the regime change that we're seeing in bond markets generally this year. Of course, we started 2022 with a conversation of really this idea of the Federal Reserve and a lot of other global central banks moving toward that tightening policy normalization sort of path, which of course was interrupted a little bit by the war in Ukraine. But I think now investors and central bankers alike are realizing that there are really a lot of inflationary impulses in most global economies at the moment. And of course, the rise in commodity prices as a result of the war also adding to that.
Christine, thank you very much. Bloomberg's Christine Aquino. Just want to get some breaking news for you across the Bloomberg. A red headline tells me that the China Eastern plane that went down, of course, we know, into a hillside in southern China with 132 people on board. The black box for that plane has now, according to the Xinhua news agency, been found. Previously, rain and the threat of landslides had halted the search for the flight recorder, but now it seems that that has been found. We will see if it gives any clues as to that steep descent that the plane clearly took. Let us get back to the macroeconomic agenda. UK inflation surged more than expected to a new 30-year high. Chancellor of the Exchequer Rishi Sunak has pledged to help the hardest hit households in his spring statement, which he will deliver later today. Let's get more of a preview with Lizzie Burden, our UK economy reporter. Lizzie, UK CPI hitting 6.2% in February, more than 3 times the Bank of England's target. How much pressure does that then put on the Chancellor?
Yes, beating expectations again and only set to climb, Anna. The Bank of England says inflation could reach double digits this year. It's already hiked interest rates 3 times, so the pressure's squarely on Rishi Sunak today to cushion the blow for consumers. He's backed himself into a corner a bit because he's emphasised the need to mend the public finances after all that pandemic borrowing. But the good news is yesterday's public finance data did give him a bit of wiggle room after stronger than expected tax revenues since October. So measures we can expect, probably higher benefits for the poorest households, probably a cut in fuel duty for more middle income households, because he can't forget Middle Britain. Millions of people have been swept into this crisis who've never had financial difficulties before, and if he loses their votes, it'll be a nightmare not just for his party but for him too if he wants to be the next Prime Minister.
All right, Lizzie Burden, our UK economy reporter outside Westminster, thank you so much. Now let's move on to the war in Ukraine. We're joined by our reporters from Washington, Brussels, and Poland. We have you covered around the world. So let's start with our Jack Fitzpatrick, our government reporter who is down in Washington, D.C. as President Biden heads to Europe to meet with allies tomorrow. So, Jack, the president has said further sanctions on Russia will be announced during his trip. What can you tell us about that?
Yeah, the way Jake Sullivan, his national security advisor, has described this is that there will be an announcement focused on further European energy independence from Russian oil and gas. They haven't given more details on exactly what sanctions there will be, but they'll be focused on that, as well as trying to avert any opportunity for current sanction evasion from any Russian officials already sanctioned internationally. So that will be part of the focus. There's also going to be a broader conversation about the situation in Ukraine, and also following up on President Biden's call with Xi Jinping, a conversation with European allies about what exactly the response would be if China were to provide material aid to Russia. So those are sort of the two main points on the docket as President Biden talks to both NATO, G7, and EU allies coming up, as both further sanctions, avoiding opportunities for sanction evasion for currently imposed sanctions, and also a bit of a what-if conversation regarding China and the warning from President Biden that there would be severe repercussions for China as well if they were to aid Russia.
Okay, certainly a lot on the docket. Jack, thank you very much. That's Jack Fitzpatrick of Bloomberg Government in Washington. Now, at the same time, Ukrainian President Volodymyr Zelensky will take part in this week's special NATO summit via video link. Let's get more with Maria Tadeo, our European correspondent in Brussels. Maria, what will Zelensky's role be in this NATO summit?
Well, for starters, Zanny, this is now confirmed. He will be joining in on this call for NATO. And there's a number of things here. One, of course, is that Ukraine has had a major reality check around NATO. The country now says it very openly. It is clear to us that we're not joining NATO. And NATO is not going to come to help us on the ground. But they still believe allies should close the sky. Remember, every day the Ukrainian government repeats this line. If the sky is open, it means it's a massacre for people. And we have seen constant bombings now for 27 days. Now, the other thing, of course, that he will ask for is weapons. He's made it clear Ukraine is not going to surrender any of its big cities. If you remember, 3 days ago, the Russians gave a chilling ultimatum to the Ukrainian government in Mariupol, saying you have to surrender the city, otherwise it will be trial by tribunal. Now, what that means is unclear, but you get an impression of the force that Russia is willing to use. The response from Ukraine was, we're not going to do it. We are going to protect and defend all of our cities. So there is an impression now very much on the ground, in particular here in Europe, that this is going to be a war that is going to be extended in time. The fighting will go on potentially for weeks. And then, of course, Danny, the other big issue is not so much related to NATO, but it does have an implication when it comes to the alliance, is Ukraine has said, okay, we don't join NATO, but then we want to join the European Union. We want to be in an international framework. So, of course, we can expect Zelensky to repeat again, we want to be the 28th member of the European Union.
Okay, Maria, thank you very much. Bloomberg's Maria Tadeo will keep across all those developments then in Brussels, from NATO to the EU. And the sanctions story, of course, is part of that. Now, almost a month since the conflict began in Ukraine, the bombardment of cities in the country's east, such as Mariupol, is continuing. Let's get more with Bloomberg's Aggie Cantrell, who joins us from a humanitarian aid centre in Poland. Aggie, Mariupol, clearly the focus of international attention at this point on the ground in Ukraine.
That's right, Anna, especially seeing as so many people have already fled the city. There is still a massive effort on the part of the Ukrainians to evacuate people from the city. It's believed that there are about 100,000 people still in the city of Mariupol. That's less than a quarter of the city's pre-war population. The thing that is clear here is that as the Russians have found it hard to capture cities like Kharkiv and to encircle the capital, Kiev, they're refocusing their efforts into strategically significant positions in the east of the country, such as Mariupol, which is only 60 kilometers from the Russian border. And so what we're seeing here is that after that ultimatum and the refusal on the part of the Ukrainians to surrender this city, it is still sustaining significant bombardment, and that as the coming days and weeks happen, we're seeing that while there is a massive inflow of refugees from Ukraine into European nations like in Poland, where I am now, there is still a massive humanitarian crisis in the country itself. And while the Ukrainians are refusing to give up any territorial concessions to the Russians, this bombardment is likely to continue.
A humanitarian crisis on both sides of Ukraine's border. Thank you so much for Bloomberg's Aggie Cantrell's reporting from Poland. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. I would like to announce that meme stocks, the original meme stocks, are back, at least in some fashion. You had GameStop up 30% yesterday. It's up another 10% or so in early hours this morning after news that its chairman Ryan Cohen has boosted his stake to 11.9%. So that aiding optimism, and it's feeding right through to the other OG meme stock, AMC, which after a 15% gain yesterday is higher by about 6% in early hours this morning. One other stock I did want to mention is Tesla. Into yesterday, it was up 6 days in a row, hitting a $1 trillion market cap. Once again, some optimism about the opening of its factory in Germany, but we're giving a little bit of those losses back this morning. Does look like it may snap that losing streak today. Right now, those shares down about 0.9% before the bell, Anna.
Coming up on the program then, Kailey, Nina Skero, CEO at the Centre for Economics and Business Research. We'll talk about the higher inflation environment. We've seen that in the UK. 3-decade high on inflation prints coming through in the UK this morning. And forcing a vote, Aincraft Capital is pushing for spin-off of German energy firm RWE's lignite operations. We'll speak to Thomas Schweppe of 7 Square, who is spearheading that campaign, about the specifics, but also broadly about the way that the German energy strategy should develop from here. Plus, later today, an exclusive interview with San Francisco Fed President Mary Daly. That's at 11 a.m. in New York, 3 p.m. in London. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. Now, over the past week or so, with this hawkish turn from the Fed, we've seen some of the worst losses for the global bond market on record. But the conundrum for this market is that equities are not playing along. Those gains are holding up extremely well. For a radio listening audience, I have a terminal in front of me that shows 10-year Treasury yields versus the S&P 500. Now, typically, these move inverse from each other. Higher yields, more restrictive policy, bad for long-duration assets like tech stocks. But we've seen equities gain as yields have moved higher. Let's get into this further with Ksenia Galuchko, Bloomberg Equities team leader, who joins us now. So, Ksenia, how do we explain this resilience behind the equity market?
Yes, Danny, it's been quite a turn of fortunes. I mean, it's been an amazing outperformance for equities, because usually when bond yields rise, it means bad news for stocks, but not this time around, because investors clearly see equities in this case to be a great inflation hedge. Because unlike bonds, companies that the stocks are linked to can actually adjust and raise their pricing. So they're seen as a great inflation protection in this case. What's been really interesting is that even growth and tech stocks, which usually tend to underperform big time when bond yields rise, have been doing quite well and staying resilient, because investors think that their robust earnings growth can continue.
Good morning to you, Ksenia. We're seeing some really interesting lines coming through from the Deputy Prime Minister in Russia, Alexander Novak, saying that it's time for Europe to start thinking of winter gas supply, and underlining how supply to this point has been reliable and in accordance with contracts. Interesting lines to be mentioning, interesting where that takes us as Europe discusses how it ensures that it has the right supply. Could this put more pressure on commodities, and could this in turn then test that stocks as inflation hedge mantra, which seems to be what the market is trading on at this point?
Absolutely, yes. So oil has been skyrocketing above $100 a barrel. It's really been an amazing trade. But the thing is, equities are such an amazing instrument where you can find those hedges even in such an inflationary environment. So we've got oil stocks, which have been greatly benefiting from this oil spike. But also, we've been noticing that renewable stocks, which have been battered last year because they were seen as too expensive, they have been doing really, really well this year. They're headed for the best quarter since end of 2020, specifically on the bet that Europe will diversify away from Russian energy and turn to renewables and green stocks.
OK, so it's not all short-term alternative gas supplies. There's the longer-term story in there as well. Ksenia, thank you so much. Bloomberg's Ksenia Galuchko with the latest on these markets. And for more market analysis, check out MLIV Go. That is the function to use to keep track of the Markets Live blog. This is Bloomberg.
Now, keeping you up to date with news from around the world, here's the first word. Ukraine's President Volodymyr Zelensky says about 100,000 people remain in the besieged city of Mariupol. He says they are without food, water, and medicine and are under constant Russian bombardment. About 6,000 people were able to flee the city on Tuesday. That China Eastern jet that crashed was traveling close to the speed of sound moments before it plunged into a hillside in southwestern China. That's according to a Bloomberg review of the flight track data. The force of the impact may complicate the investigation, but still breaking news this hour that searchers say they have now found one of the plane's 2 black box recorders. And coming up, we'll get back to the macro market picture, the macroeconomic picture at that. Nina Skero, CEO at the Center for Economics and Business Research, will be joining us. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Global bond markets have never suffered losses like these. As central banks have tightened policy, the Bloomberg Global Aggregate Index has fallen 11% from its high in January of last year. That equates to a $2.6 trillion drop in value. President Biden is heading to Europe, where he'll try to rally allies around tougher sanctions to punish Russia for invading Ukraine. The president will join back-to-back summits on Thursday in Brussels with NATO, the Group of Seven, and the European Union. And Wall Street is retreating from Moscow after catering to Russian firms, billionaires, and the government for decades. The big banks can't get out of the country quickly enough. We'll have more in today's Big Take story coming up later this hour. I'm Anna Edwards with Danny Berger in London. Kailey Leinz is in New York. Matt Miller is off today. And Kailey, incredible start to the week when it came to that bond market sell-off. Today does look a little bit calmer on that front.
Yeah, and it's been really calm in the equity market. In fact, positive in the equity market, even in light of that real pain we have seen in bonds. Both of those things, though, do seem to be taking a breather today. When you take a look at the future session, while we were positive earlier, we have since rolled over. Right now, S&P 500 futures down by about 0.2%. But that is after we have seen the index gain at least 1% in 5 of the last 6 sessions. Now, in the last 2 sessions, we've seen the 10-year Treasury yield move up 23 basis points. Today, though, a slight breather. It comes in about a basis point or 2. We're just shy of 237. Oil is moving upward as well as we consider the outlook for sanctions and whether or not a European embargo of Russian fossil fuels will be coming. Right now, WTI is gaining about 1% or so. We're just around that 110 a barrel level. And finally, just pointing to Bitcoin, we remain in the range, although it is moving in tandem with other risk assets, down about 1% at this point, right around that $42,000 level. As for some stocks moving in pre-market trading, I wanted to point to the original meme stocks, which have seen some kind of renaissance over the last 24 hours or so. GameStop up 23% yesterday after its chairman added to his stake. It's up another 10% in early hours this morning. And AMC also a big gain yesterday. It's higher by about 6.5%. One other stock moving to the upside for a second day is Alibaba. A lot of optimism around that buyback and the idea that that regulatory crackdown in China may be easing. It's higher by about 2 percentage points. Tesla, though, after crossing $1 trillion in market cap once again yesterday after a 6-day winning streak, looks like it may snap that winning streak today. It's lower by about 1% before the bell, Anna.
Interesting to see those moves in meme stocks, Kailey. And meme stocks as inflation hedge, discuss. I'm sure we've got plenty of time for that conversation. This is what we see on stocks here in Europe. So we're actually losing a little bit of momentum in the European trading session, but only back to the flat line. So we're pretty flat on the stocks Europe 600 right now. We're moving higher. We continue to move a little higher towards recent highs on the Brent crude price. 116 is where we start that price, up by 1.2% in today's session. We're increasingly focusing on where the next leg of sanctions is going to come from. We maybe haven't seen peak sanction. That's what we're led to believe. And so looking to get more clarity from the NATO meeting, that G7 meeting, the EU Leaders Summit, all of that could add to our understanding around sanctions. The pound is at 132.40 as we head towards a statement, a spring statement from the Chancellor of the Exchequer, Rishi Sunak. He's going to be very mindful of that 3-decade high in inflation that we saw just this morning. More on inflation and the macro backdrop in just a moment. But what pressure does that put on the Chancellor to try and address that cost of living? And I put in here RWS Holdings. This is a business that is guiding lower in terms of its performance. So a broader story than just Russia, but also in part of their statement today. This is a professional services firm. They do translation and other technology services. They're saying they're not going to be providing any of those services to any Russian businesses now. Danny.
Yeah, perhaps save for RWS. It is remarkable to see little change on those equities despite the concern for economic damage due to the war. Let's dig into the economic picture more. Joining us now is Nina Skero, CEO at Center for Economics and Business Research. Nina, thanks so much for joining. I want to start here. We had a warning out from the Dallas Fed yesterday saying that if we don't have Russian energy on the market, we could see a recession, and that recession would be worse than it was in 1991. What do you make of that?
A lot of the outlook for the coming quarters does depend on what happens on the Russia-Ukraine front and also how much further sanctions go. So we just heard that perhaps we haven't seen peak sanctions, and I would agree with that. I think the next big questions on the sanctions front is what is going to come out of the European bloc in terms of going further on sort of unpairing their dependence on Russian energy, and if we're going to see more decisive action on that front. I think in terms of the sanctions we've seen from the US and the UK, I think we are probably closer to peak sanctions because there aren't that many very meaningful moves they could still do.
So, Nina, good morning. So do you think we will perhaps see Europe taking a stand on Russian energy supplies? We heard Alexander Novak, the Deputy Prime Minister in Russia, saying it's time for Europe to start thinking of winter gas supply, a slightly chilling statement perhaps, but reminds us of the vulnerabilities that exist for the Eurozone economy and for the European economy more broadly when it comes to reliance on Russian energy. Do you think that it is a feasible step to take to block imports of Russian energy?
Well, that quote, I mean, you can't even call it a thinly veiled threat because it's not really thinly veiled at all. It's just sort of a threat. We've certainly seen from the comments from ECB policymakers recently, I think they are preparing us for the fact that harsher sanctions might be coming. We've heard commentary like we are going to maintain a more accommodative policy stance than we're going to see from the Fed, for example. And I think what message that is sending is they are saying we're going to need to diversify our energy supplies faster. Because of that, we're going to need to keep those investments up. We're going to need to keep a very loose fiscal and monetary environment. So it certainly seems possible that we're going to see an acceleration away from Russian energy dependency.
And this has placed pressure on governments around the world to think about what they do for people to tackle the cost of living. Today, we're going to hear from the UK Chancellor, Rishi Sunak, and he's going to have fresh inflation data to sort of feed into his thinking, a 3-decade high on inflation numbers here in the UK. What do you expect to hear from the Chancellor today?
I don't envy the Chancellor today because it's a very complicated and mixed picture. On the one hand, there is fiscal headroom to play around with because tax receipts have been much higher than forecast due to inflation. On the other hand, there is a cost of living crisis. So, and I don't think that sort of the spring statement is the best opportunity to sort of try navigating. I think, inflation management is best left to the central banks. On the other hand, we are hearing that almost certainly we're going to see action on fuel duty, which again is complicated in its own right because the government has been placing such an effort on sort of the green transition. So what I think we're going to see is some limited action on the cost of living, particularly targeted to lower income households. I would also like to see some reversal of the tax hikes that have been announced for later in the year, but I think that is less likely.
Okay, Nina, so that's on the fiscal side. On the monetary policy side, the BOE did deliver a hike last week, but it was in some ways a dovish hike, indicating maybe they are a little bit more worried about growth rather than inflation. For the Federal Reserve, which also hiked, the indication was it's much more worried about inflation than growth. Which is more credible in terms of a Fed that wants to be aggressive and the BOE, which is signaling maybe it will be less so?
I think it's possible that those two central banks are facing slightly different set of circumstances. So the inflation pressures have been very, very strong in the U.S. And also the U.S. is far less exposed to the Russia-Ukraine fallout. So I think for them, they are now as hawkish, if not more so, than they would have been a few months ago. If anything, the sort of 6 hikes they've mentioned for the rest of the year, I think some of those actually might even have to be preloaded, and we might see higher rates even sooner than the Fed has indicated. I think the Bank of England, they were probably at a similar place before the Russia-Ukraine situation erupted, and I think they're now trying to soften their stance in recognition of the fact that there is more downside economic risk here than there is in the United States.
Well, and to your point on the Fed, Nina, we've now seen a series of Federal Reserve speakers, including the chairman himself, indicating that 50 basis points may be the move come May. Is the Fed going to be able to execute a soft landing here?
Well, that is the trillion-dollar question. Certainly it seems that markets have some optimism that the Fed can engineer a soft landing and that we won't see a recession. And I think if in the coming months we see inflation gradually start to come down, I think that will be the strongest indication that what the Fed is doing is working. I think if we see inflation rates that are above 10% for a sustained period of time, I think that is then getting to a point where it's hard to see how we're going to have a reset of that economic cycle without a recession.
Nina, thanks so much. Thanks for spending time with us here on the programme. Nina Skero, CEO at the Centre for Economic and Business Research. Coming up on later programming, in fact, coming up just in a few moments, forcing a vote. Encraft Capital is pushing for spin-off of German energy firm RWE's lignite operations. We will talk about that. We will speak to Thomas Schweppe of 7 Square, who is spearheading that campaign. We'll also talk about broader energy themes with him. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, UK Economic Secretary to the Treasury, John Glenn. That's at 11 a.m. in New York, 3 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London, as well as Danny Berger. Matt Miller is off today. Now, German Chancellor Olaf Scholz says it's too soon to discuss Russia's continued membership in the G20 and WTO. Let's get more with Bloomberg's Birgit Jennen, who joins us from Berlin. What is the latest that we are hearing from the Chancellor, Birgit?
Well, the Chancellor is preparing basically for the EU and the Nato and the G7 summit. And he has not yet said anything of whether Germany is willing to concede any more sanctions against Russia. But he has sort of, signaled some openness to certain discussions, namely, for example, also as what Poland has demanded to exclude Russia from the WTO and the G20. But I mean, he doesn't want this debate at the moment at the coming EU summit because he does want to keep the communication channel to Putin open.
Birgit, at the same time, you have Scholz saying that Germany wants to cut back on Russian energy as soon as possible, also comments over wanting energy independence. What does that look like in Germany? What will they have to do and how long will it take to achieve that kind of future?
Well, exactly. I mean, it is a massive enterprise because German economy, as we all know, is heavily dependent on cheap Russian gas. So you have to look separately at oil and gas. Gas probably will take a longer time to be really replaced. I mean, they will now are introducing sort of regulation that at least the companies are building up their reserves. They want the companies to build reserves to 90% by December. But of course, that also depends on deliveries from suppliers. So, and surely they are looking to Norway, but it's unrealistic to think that Germany's gas supply can be replaced in a short term space sort of by winter totally. But Habeck is more optimistic when it comes to oil. There, probably the reserves can be filled. And they are also looking at basically expanding or extending the coal exit so that coal can also sort of serve in the medium term.
Okay, Birgit, thank you very much. We were just showing there on the screen a great chart talking about European gas storage in 2022 running below seasonal averages, something that no doubt politicians are very mindful of. Staying in Germany, the activist investor Encraft Capital is forcing global energy company RWE to vote on a potential spin-off of its lignite operations. Joining us in Frankfurt to discuss this is Thomas Schweppe, managing director at Seven Square, which is spearheading the campaign. Thomas, very good to speak to you. Tell us what it is that you or those you advise want to see happen at RWE.
Look, we think it's sort of time for RWE to take action and separate really the lignite business from what actually is a renewable energy company. RWE is the third biggest emitter of CO2 in Europe, behind Arcelor and behind Lafarge-Holcim, and you just can't be a renewable company in that position.
Yes, indeed. I mean, lignite, often referred to as brown coal, I understand. How much more do you think the RWE business would be valued then if it didn't have that kind of business under its umbrella?
Look, we believe there is sort of a value upside of call it north of 16 billion euros, and that is if you compare sort of where the company trades today compared to the pure play renewable businesses like Ørsted or EDPR.
Thomas, in trying to get RWE to improve their climate credentials, and really not just RWE, but corporates more broadly, how does the specter of war and a Germany trying to move away from Russian energy complicate or perhaps enforce that type of action?
Look, obviously, we thought very carefully around sort of, is this now the right time to push this against the backdrop of the events in Ukraine and sort of the energy situation in Germany. Quite frankly, we believe the arguments are as valid as ever. If coal is such a politically charged topic, there is, in addition to all the value and ecological arguments that speak to separate it from RWE, there is also a security point where you could say, like, now is the time to sort of involve the government a bit more to hold this as a reserve that helps
Thomas,
Germany to become a bit less dependent.
If I can just jump in here, the government acting first. This is an argument that RWE has made, that it's waiting for the government to announce the phase out of some of these energy sources like lignite. Is there any validity to that it should be the government that acts first?
Well, quite frankly, we believe no, and as you point out, this has been a continuous argument by RWE. We don't want to be the first one to sort of act on this. They are the owner of the asset. They are responsible. The separation project and process is a complicated process. It needs to be initiated. From RWE. RWE as the owner needs to sort of present options to the government. I think there's enough topics that the government short and longer term has to deal with. I think as the owner, RWE should have show action here and be constructive and a constructive partner.
Thomas, more broadly, the German government is trying to turn away from Russian energy. Do you see a situation where corporates in Germany and Germany as a whole turns to resource nationalism? That we get this situation where governments look inwards, prioritize themselves, and you have a hoarding of these types of commodities?
Well, look, I think first of all, the question of energy independence obviously is huge, and we're sort of to probably turn back a bit of what has been created over the past 20 years, dependency on Russian gas. Having said that, the only real new energy source that helps to wean off is really renewables. So, that's where, for example, a company like RWE should focus on to deploy capital in Germany, creating these alternatives over time. And, as I said before, I think I could see the German government to probably hoard some of these energy sources, have more control over them. Again, the long-term problem. The short-term problem is to sort of wean off Russian gas. The longer-term problems remain what they were before this crisis. That is sort of climate change and to a degree also energy security. And the government is and society is sort of the right one to balance here between these two, ecological arguments as well as energy supply or security of energy supply.
Thomas, thank you very much for joining us. Thomas Schweppe, Managing Director at 7 Square and Encraft Capital Advisor. Thanks for spending time with us on the programme. Coming up on this programme, Russia's banking exodus. Wall Street is retreating from Moscow at a record pace. More in today's Big Take story. NI Big Take is the function to use on your Bloomberg if you want to get ahead on that one. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Anna Edwards in London and Kailey Leinz in New York. Matt Miller is off today. Now, global finance firms have maintained a presence in Russia for decades. After Russia launched its assault on Ukraine, Citigroup, Goldman Sachs, Deutsche Bank, and more retreated in a matter of weeks. Bloomberg's Harry Wilson joins us with today's Big Take. Harry, so for many banks, this is a big operation. How costly will it be for them?
Well, the simple answer is we just don't know at the moment. It looks like it could be exceedingly costly. I mean, particularly some of the banks which have the larger exposures there. So as you mentioned, Citigroup for one, but on the European side, you've got Raiffeisen, UniCredit. And we don't really know because a lot of the markets there are frozen. So it's not a question that they could get out at the moment. They just simply can't. And that's before you get into more difficult things like a retail bank. You can't. There's not an obvious buyer out there at the moment for a Russian retail banking business.
Yeah, so even if you want to sell the thing, there's not necessarily anyone who will buy it. In terms of the relationships then between Western banks and Western professional services firms, lawyers, for example, and Russia, they'd perhaps seen this as an area of expansion. Now they don't see it as an area of expansion. Are we seeing a real sea change? Is this a real shift in the relationship between the two then?
I mean, I suppose the Russian market has been through sort of countless crises over the years, and I suppose this time it's different, though. I mean, the level of sanctions, the sheer sort of moral outrage in the West that's occurring, I think that makes it very different. This isn't like the annexation of Crimea. This is something far more serious, and I think that actually this time, there is a moral force on a lot of these businesses, whether or not they what the business case is, that they simply just have to get out or be seen to be getting out.
Well, the fascinating thing is, as you say, they need to be seen to be getting out, but assets are frozen. They can't actually move. In a lot of ways, banks seem unprepared for action like this. So what does it mean for banks going forward? Are they going to have to change if in a different region they face another crisis like this?
I think there probably are going to be some lessons from this. I mean, I think for one, that they're going to have to look very carefully at the rest of their businesses. I mean, one area obviously would be China. There is already a sort of drumbeat about what this could mean in terms of some future situation with China and Taiwan and how Western businesses might react to that. But obviously that's on a vastly different scale to what you're seeing at the moment in Russia and would be even more complex. But maybe there are some lessons that they could be taking from this.
Thanks very much, Harry. Good to speak to you. Learning lessons from Iran and learning lessons from this and thinking about what on earth that could mean for China if we ever got there. Thanks very much for joining us, Harry Wilson, with the latest on that Bloomberg Big Take story. We're watching oil prices, Danny. Oil prices going a little bit higher, just as we get some lines from the Russian Deputy Prime Minister saying repairs to the Caspian Pipeline Consortium C terminal may take 1.5 to 2 months. We'll monitor that. More Bloomberg surveillance is ahead. This is Bloomberg.